Very, very good morning to all of you, my friends. Welcome back. Good morning, everyone. Good morning, Nitin. Good morning, Ritika. Good morning, Mallu. Good morning, Bhumika, Pranav, Sanya. Good morning, everyone. So, good morning, Hardik. Good morning, Rishita. Good morning, Sai Kiran Kumar. So, I hope you guys are thorough with what I have discussed in the previous session relating to process costing. So, let's take a quick brief about what I have discussed in the previous session. So we started with process costing, wherein when talking about process costing, it's a method of costing used by those companies or manufacturing concerns wherein their raw material has to pass through two or more than two processes before being converted into final product. Since each process is unique and separate, therefore, a separate process account is to be prepared for every process to record the costs that are pertaining to a particular process. So I hope this part is clear to all. Thereafter, we solved a very basic question on process costing, wherein there was no normal loss, abnormal loss, and abnormal gain. Thereafter, we started with normal loss. When talking about normal loss, this loss is unavoidable. And when talking about normal loss, when talking about the treatment of normal loss, the value of normal loss is absorbed by good units. The product cost will be inflated because of normal loss. Thereafter, we discussed abnormal loss, that is the loss in excess of predetermined loss, or normal loss is abnormal loss. It is avoidable if suitable measures are taken. When talking about the treatment, it is shown in credit side of process account. When talking about the value of abnormal loss, the value of abnormal loss will be equal to the value of good units, and it is further transferred to costing P&L. We discussed one question on abnormal loss also. Thereafter, we discussed abnormal gain, that is when the actual production exceeds the expected production, we call it as abnormal gain. Abnormal gain, again, it is to be shown in debit side of process account and thereafter transferred to costing P&L. So I hope you guys are thorough with what I have discussed till now. Now let's discuss a full-fledged question. Wherein we'll be covering everything in detail what I have discussed in the previous session. So let's start with a question. I request you guys to please open your study material. I'll be discussing illustration number 3. Giving you 2 minutes time, I'll be discussing illustration number 3 of study material. Good morning, Ankit. Good morning, Nancy. So let's start with this illustration number 3. RST Limited processes product Z through two distinct processes, process first and process second. On completion, it is transferred to finished stock. From the following information for the current year, you are required to prepare process first account, process second account, and finished stock account. So herein, there is a company wherein there are two processes, process first and process second. And once the process second is completed, the output is transferred to finished goods account. Now the details are given wherein the raw material purchased is given, the raw material cost per unit is given, the transfer to the next process, that is the output that is transferred to the next process, is given, normal loss is given, direct wages are given, direct expenses are 60% of direct wages, Manufacturing overheads are given. Realizable value of scrap per unit is given. That is the realizable value on sale of normal loss. Now, 6,000 units of finished goods were sold at a profit of 15% on cost. Assume that there is no opening and closing stock of work in progress. So let's start with this question. We are discussing illustration number 3 of study material. So let's start with process first account. So two materials, 7,500 unit, and they were purchased at the rate 60 rupees. So this will be 4,50,000. Thereafter, direct wages are there, 1,35,750. Direct expenses are 60% of direct wages. So direct expenses are 60% of direct wages. So it will be 81,450. Further, manufacturing overhead are 20% of direct wages. So this will be 27,150. Further, when talking about the normal loss, it is 5% of inputs. So we have recorded all the expenses now by normal loss. It is 5% of input. So this will be 375. Further, the scrap value is also given, that is 12 rupees 50 paisa. So the total scrap value will be 4687.5. Better will round it off to 4688. Alternatively, you can keep it in decimals also. Now, the units that are transferred to the next process is 7,050. By process second, 7,050. Now see, 7,500 was my input and my normal loss is 5% of input. It means my expected output is how much? 7,500 minus 375, that is 7,125. However, so 7,125 was my expected output. However, my actual output is 7,050. It means there is an additional loss of 75. You guys can call it as balancing figure also. So there is an additional loss of 75. We call it as abnormal loss. Now at the end of the day, we have to calculate this value. So let's start with calculation of cost of good unit or cost per unit. $694,350 minus 4,688. The total cost of the process minus the scrap value realized on sale of normal loss divided by my expected production, that is 7,500 inputs minus 375. So this will be 7,125. So this will be 96.7947. Ultimately, in short, we are distributing this total cost minus normal loss among these two. So 96.7947 into 75. So this will be 682,402. This will be 7,260. If you guys have any doubts in this part, you guys can please post your query. In short, this is the balancing figure, Ms. Gupta. 7,500 minus 375 is my normal loss, minus 7,050 is my output that is transferred to the next process. So this figure is my balancing figure. Now let's prepare abnormal loss account also. As I said, this question is a revision of what we have discussed till now. So I'll be covering each and every point in detail. So to process first, by bank, assuming just like normal loss, these units are also sold in the market at the same price. $375 is my normal loss, and scrap value that is on sale of normal loss is given, that is 12.5. 375 into 12.5. So this is the amount realized on sale of abnormal loss. Again, 75 into 12.5. So balance amount will be transferred to costing P&L. It will be 6322. Again, this is the balancing figure. So this is all what about process first account, wherein we have prepared the process first account and abnormal loss. If you guys have any doubts in this part, you guys can please post your query. Hopefully, Ritika Gupta, your query is resolved. Tambeshwari, hopefully your query is resolved. Bhavna Garg, any doubts? Bhavna? Okay. So, Bhavna, when talking about abnormal loss, 75 units, 7260, this amount is transferred. Assuming just like normal loss, these units are also sold in the market at the same price, that is 12.5. So 75 into 12.5, 938. And balance amount will be transferred to costing P&L. Now let's start with process second. So let's start with process second. So the output of process first is transferred to process second. So to process first, 7,050, and here it is 682,402. Further, the wages is 1,29,250. Now to direct expenses and manufacturing overheads. So 65% of the direct wages are my direct expenses. So 84013. Further, 15% of the direct wages are my manufacturing overhead. So 19388 are my manufacturing overhead. By normal loss, when talking about normal loss, it is 10% of inputs. So my inputs are 7050. So this will be 705. And when talking about the amount realized on sale of scrap, it is 37.5. 37.5. So this will be 26438. The units that are transferred to finished stock is given in the question, that is 6525 units. Now, 7050 was my input and my expected output is 6345. That is 7050 minus 705. That is 6345. However, my actual output is 6525. That is 180 more than what we expected. So we call it as abnormal gain. We call it as so herein in this question, there is an abnormal gain of 180 units. Now again, we have to calculate the value of good units and we have to calculate these two values. So again, the calculation of value will be the same. The total cost minus scrap value. Let's calculate the total cost. So we have got the cost per unit, that is 1400496. If we multiply it by 6525, nine one three 824 This will be 25209. If you guys have any doubt in process second account, you guys can please post your queries. Anyone having any doubts in process second account, you guys can please post your queries. Yes, Bhavna, Tambeshwari, any doubts, guys? Nancy, Ankit Mishra. So how come 180? See, my input is 7050 and my normal loss is 705. In short, we can say this is my balancing figure. You can assume. See, 705 is my normal loss, finished stock is 6525 and my input is 7050. So this will be the balancing figure, that is 180. Anyone else? Yes, Bhavna, Tambeshwari, any doubts, guys? Now let's proceed further. So let's start with abnormal gain and normal loss account. Since when talking about abnormal gain, what is abnormal gain? Alternatively, we can say it is a saving in normal loss. So let's start with normal loss and abnormal gain account. For process first also, we can prepare normal loss account, but it will be very easy. That is, in normal loss, to process first and buy back. That's it. But normal loss account is the key when there is an abnormal gain. Because as I said, what is abnormal gain? It's a saving in normal loss. So herein, when talking about process second, my normal loss is 705 and 26438. Now, of this 705 units, my abnormal gain is 180 units. It means the units that are sold in the market will be only 705 minus 180. That is 525 units are only sold in the market at the rate 37.5. So balance amount will be adjusted against abnormal gain, that is 6750. I repeat again, when talking about abnormal gain, what is abnormal gain? It's a saving in normal loss. It's a saving in normal loss. So 705 units is my normal loss. However, there is an abnormal gain of 180 units. It means the units that are sold in the market is only 525. So 525 into 37.5 and 180 into 37.5. Now let's prepare abnormal gain account wherein by process second 180 and 25209. Of this, the amount that is transferred from normal loss is 180,6750. So balance amount will be transferred from costing P&L. One eight four five nine. So this is how abnormal gain account is prepared. We have already discussed this part in detail separately. Now let's prepare finished stock account. So herein the finished from process second, the units are transferred to finished stock account. So this will be 2 process second 6525 and 913824. Now, of these 6525 units, only 6,000 units are sold in the market. Balance are still in stock. So, by cost of sales, only 6,000 units are sold in the market. Balance units are still in stock. So, by balance CD 525. Cost we have already calculated, that is 140.0496. So this will be 840298. So this is all what about finished stock account. Now the last part, better prepare costing P&L also. So to cost of sales, 840298. By sales, it is given that these units are sold at a profit of 15% on cost. So this will be 966,343. Further, the amount of abnormal loss and abnormal gain will also be transferred to costing P&L. That is 18459. And abnormal loss we have calculated, that is 6322. So this is how we'll get the total profit. So this is how these accounts are prepared. So this is how this full-fledged question will be solved. If you guys have any doubts or queries in this solution or explanation, you guys can please post your query. This is all what we have discussed in previous session. So it's just a quick recap of what all we have discussed in the previous session. So waiting for your queries. Again, as I said, stick to the concept. In the previous session, we discussed the concepts of normal loss, abnormal loss, and abnormal gain. So once you are thorough with this concept, you can solve any question. I mean, where there is no work in progress specifically. But if work in progress is not given, and if you are thorough with what I have discussed in the previous session, you guys can solve any question. Now, in study material, these accounts are not prepared. So I request you guys to please copy these 3 accounts. And in the meanwhile, if you guys have any doubts or query, you guys can please post your query. Miss Mahalakshmi, as I mentioned that in process first also we can prepare normal loss. It will be very simple. That is, do process first and buy bank with the same amount. So again, at this part I have skipped. Ankit Mishra, any doubts? I request you guys to please copy this explanation first. In the meanwhile, those who have any doubts or query, you guys can please post your queries. So Ankit Mishra and Mahalakshmi, hopefully your queries are resolved. So Ritika Gupta, in finished stock account, this amount will be transferred from process second, that is 6525 and 913824. Now it is given in the question clearly that only 6,000 units are sold in the market. So 6,000 units are sold in the market. So balance 525 units are still in stock. Now, how come this figure 840298? I have got the cost of the output of process first, that is 140.0496. So this will be 6,000 into 140.0496. This is how I got 840,298. And this again 525 into 140.0496. This is how I got this figure. When 6,000 is not given, the entire amount will be in stock. That is buy balance carried down. That's it. Anyone else? Any doubts, queries? Ankit Mishra, any doubts? Good morning, Mr. Sahu. Okay, so I have a doubt. I'll be posting a question. I request you guys to please post the answers. So let's say the following are the extracts of process first, wherein normal loss is 700 units, scrap value is, let's say, at the rate 10 per unit, abnormal gain is 250 units, and the value of abnormal gain is, let's say, 8,700 rupees. Calculate the amount to be transferred to costing P&L from abnormal gain account, and prepare abnormal gain. So I request you guys to please post the answer, wherein the normal loss is 700 units and the scrap value realized on sale of normal loss is at the rate 10. The abnormal gain is 250 units and the value of abnormal gain is 18,700 rupees. You are required to prepare abnormal gain and normal loss account, and further you guys have to post the answers like what will be the amount that will be transferred to costing P&L. So I've got answer from Sanya, Bhavna Garg, I have mentioned it, Ankit Mishra. Please recheck the calculation. I've got answer from Sanya and Bhavna Garg. Rest all waiting for your answers, guys. I've got answer from Hardik. So Mr. Sahu, Ankit Mishra, Mahalakshmi, Nancy, Balachandar, do post your answers. Bhavna Garg, it is 18,700. I've got answer from Vishmita. Yes, Tambeshwari, Ritika Gupta, Preeti, Nitin, Sai Kiran Kumar, Hardik, waiting for your answers, guys. So this is how normal loss and abnormal gain account will be prepared. Mahalakshmi, please check your answer. In normal loss account, there will be no costing P&L. Good Anjali, good Kasak. Pranav, good. Hardik, very good. Deepak, correct answer. If you guys have any doubts or queries in this part, you guys can please post your queries. So we are done with this part now. So now let's proceed further with the next part of the chapter. So we are done with all the basic part wherein we have discussed normal loss, and abnormal gain. So now let's proceed further with the next part of the chapter wherein what if in case the output of a particular process is transferred to the next process at cost plus profit. See, till now we have discussed that the output of the process first is transferred to the next process at cost only. So there was no profit element involved. Now, what if in case the output of a particular process is transferred to the next process at cost plus profit? So let's start. Let's start with illustration number 6 of the study material. I request you guys to please open your study material. I'll be discussing illustration number 6 now. So let's start with illustration number 6. A Limited produces product AXE, which passes through two processes before it is completed and transferred to finished stock. The following data relate for the month of October, wherein the data is given for the month of October. Opening stock is given, direct material, direct wages, factory overheads, closing stock, and interprocess profit included in opening stock is given. Now here it is given that the output of process first is transferred to process second at 25% profit on transfer price. So output of process first is transferred to the next process at 25% profit on transfer price. That is 25% profit on selling price. Further, the output of process second is transferred to finished stock at 20% profit on the transfer price. Now, stock in process is valued at prime cost. Further, finished stock is valued at the price at which it is received from process second. Sales during the period is 1,40,000. Prepare process cost account, finished goods account showing the profit element at each stage. So herein, the output of process first is transferred to process second, and process second is transferred to finished stock at cost plus profit. So herein, we'll be preparing the process account in a different way. This is illustration number 6, page number 10.25. So this will be cost. One second. So cost, profit, and total. Cost, So wherein the profit element is involved in a particular process, so the process account is to be prepared as cost, profit, and total, cost, profit, and total. So now I'll be addressing your query, Kasak, later on. Let me complete this question first. So now let's start with this question. Here in the opening stock is given, that is 7,500. Material is 15,000. The cost is 15,000. No profit element. Further, the wages are 11,200. Now herein, the closing stock is 3,700. Now we have two options. Either we can show the closing stock here, or we can subtract the closing stock here. Both the approaches are correct. So herein, I'll be subtracting the closing stock here on the debit side only. So 7,500 plus 15,000 plus 11,200. So this will be 33,700. We'll subtract the closing stock here only. Either alternatively, we can show it on the credit side also, or we can subtract it here. Both the approaches are correct. So my closing stock is 3,700. So this will be 30,000 and this will be 30,000. Alternatively, you can show the closing stock on the credit side also. Further, the factory overheads are 10,500. The factory overheads are 10,500. So my total cost will be how much? 30,000 plus 10,500. Now this output is to be transferred to the next process, that is process second, at cost plus profit. And here in the profit element, we have already it is given in the question. The profit element is given in the question. That is, the output of process first is transferred to the next process at 25% profit on transfer price. The output is transferred to the next process at 25% of the. So assuming transfer price be 100, profit is 25. So my cost will be 75. So my total cost is how much? 40,500 divided by 75 into 100. So this will be 54,000. This will remain same, that is 40,500 will remain same. So my profit will be 13,500. So So this will be 40,500, 13,500 and 54,000. If you guys have any doubts in this part, you guys can please post your queries. I've considered factory overheads also, my dear. So I repeat again, the opening stock is 7,500, no profit. Material again, the cost, no profit. Wages again, no profit. So this is 33,700. My prime cost is 33,700 minus my closing stock. Alternatively, you can show the closing stock here also. Both the approaches are correct. So 3,700, you can show closing stock here instead of subtracting this. So we have got 30,000, 30,000. Now factory overheads 10,500, 10,500. So my total cost is 40,500. Now this 40,500 is equals to 75. So how much will be 100? It will be 54,000. We can't write the closing stock after overhead. See, opening stock, add direct expenses minus closing stock. This is how we will get the prime cost. Yes, this is the format to calculate Preeti. Further, closing stock is to be deducted before factory overheads. Rishita, again, the profit is 25% of the transfer price. So let's say the transfer price or 25% of sales. So assuming transfer price is 100, so profit will be 25 and cost will be 75. So 40,500 is my cost, that is equals to 75. So how much will be 100? 54,000. So this is how I got 54,000. Anyone else having any doubts or queries? Yes, Ankit, Mahalakshmi, Vishmita, Balachandran, Nancy. Anyone having any doubts? Mr. Sahu, Preeti, any doubts? Pranav and Preeti, any doubts? In this profit element, there will be no abnormal gain. Don't worry. So let's start with process second account now. Ritika Gupta, I'll be addressing your query after this question. Don't worry. So now let's prepare process second account. So here in opening stock we have is 9,000 and inter-process profit included in opening stock is 1,500. So my opening stock total is 9,000 and the inter-process profit included in opening stock is 1,500. So my cost will be 7,500. I repeat again, my opening stock is 9,000 and the inter-process profit included in opening stock is 1,500. So my opening stock cost will be 7,500. Now to process first, it was I think 40,500, 13,500 and 54,000. 40,500, 13,500 and 54,000. Now let's record all the costs wherein material wages are there. So my material cost is 15,750. My wages cost is 11,250. So herein my prime cost will be what? So this will be 75,000. This will be 15,000 and this will be 90,000. Now we'll subtract closing stock. Now my closing stock is given in the question, that is 4,500. Now very important guys, in this question, it is given that the stock in process is valued at prime cost. See, process first में हमें कोई problem नहीं है because it was process first, so no profit element involved. But in process second, some profit element is involved, that is received, that is of the stock that is received from process first. So here it is given in the question that this closing stock is to be valued at prime cost. And the value of closing stock is 4,500. So we have to reduce the profit element to calculate the total cost. So herein, as it is said that it is valued at prime cost, so 15,000 is the profit involved in this total 90,000. Total 15,000 is the profit that is involved in 90,000. So how much will be the proportionate profit for 4,500? Very simple guys, 15,000 divided by 90,000 into 4,500. So this will be 750. So this will be 3,750. So this will be 85,500. In this, we'll add factory overheads to calculate the total cost, and my factory overheads are 4,500. So my total cost will be now very important, guys, do make a note of it. This 750, the total cost will remain same. Now, very important, guys, when talking about process second, for process second, the total cost is 90,000 only. The overall cost of the company till now is 75750. But for process second, still now they have not charged any profit. For them, the cost will be 90,000. So herein, very important, guys, it is given that the output of process second is transferred to finished stock at 20% profit on transfer price. So 20% on transfer price. So assuming transfer price as 100, profit as 20, so cost will be 80. So 90,000 will be equal to 80. So this will be 1,12,500. So this is the total amount minus 750,750. So total profit till date is 36,750. That is of process first and process second. However, profit for process second will be how much? It will be 22,500. This point is very, very important, guys. Don't calculate this profit on 75750. See, this kind of things are done when every process is to be treated as separate profit center. So when talking about the profit of process second, it is 22,500 only. But however, the total profit till date of process first and process second is 36,750. So very important, guys, this calculation of 1,12,000 is done on 90,000. That is this figure, not on 75750. If you guys have any doubts or queries, you guys can please post your queries. Anyone having any doubts or queries, you guys can please post your query. See, Bhavna, very important. This is the total cost of process first and second. For process second, being a separate responsibility center or cost center or profit center, 90,000 will be the cost because process second ने अभी तक अपना profit जोड़ा नहीं है. So for them, 90,000 is the cost. But when talking from company's perspective, the cost is 75750. जो 14,250 जो प्रॉफिट है वो प्रोसेस फर्स्ट का है, बीइंग अ सेपरेट कॉस्ट सेंटर और प्रॉफिट सेंटर. दिस 14,250 is what? The profit for process first. And process second is not aware about that process first ने कितना प्रॉफिट कमाया. For process second, the cost is 90,000. प्रोसेस सेकंड के लिए कॉस्ट क्या है? 90,000 है. बट यस, फ्रॉम कंपनीज परस्पेक्टिव द कॉस्ट इज 75,750. So that's why I have taken this 20% on 90,000. See, Tambeshwari, the opening stock is given, that is 9,000. And further, it is given in the question clearly that inter-process profit involved in, sorry, inter-process profit included in opening stock. Opening stock में already जुड़ा हुआ है कितना? 1,500. So 9,000 minus 1,500. This is how I have calculated 7,500. Yes, Mahalakshmi, Balachandran, Ankit Mishra, Sahu, Nancy. Anyone having any doubts, guys? Those who are over the portal, anyone having any doubts? So, Preeti, I repeat again, this is the opening stock. 1,500 is the inter-process profit included in the opening stock. So, this is how I got the cost. The process first, that is the amount that is received from process first. Thereafter, the material cost, wages, prime cost. Now, why I have calculated prime cost? Very important, because it is given in the question that the closing stock of the process is valued at prime cost. इस वजह से हमने जो ये प्राइम कॉस्ट कैलकुलेट किया, else we wouldn't have calculated. So here in the closing stock is valued at prime cost. So 75,000 is the cost, profit is 15,000, and 90,000 is the total amount. Now, since the closing stock is valued at prime cost, the closing stock is 4,500. So the total profit till date is 15,000 and the total amount is 90,000. So the proportionate amount for 4,500 will be 750. So 4,500, 750. This is how I got 3,750. So after subtracting 7,1,250, 14,250 and 85,500, thereafter we have added factory overheads to calculate the total cost. And then we have calculated the amount that is to be transferred to finished stock account. Those who want to copy the solution can please copy. I'm not getting what you are saying, Tambeshwari. Again, my solution is presented in a bit different way from study material. So those who want to copy this explanation, you guys can copy. I find this approach better because cost, profit, and total. In study material, I think it is given like total cost and profit. So it's better to present in this way, that is, this much is my cost. If we add profit in cost, then we will get the total amount. So Preeti, any doubts? Bhavna Garg, any doubts? Tambeshwari, any doubts? Hardik sir, in question, if it is not written that opening stock profit has to be shown, then we have to subtract it from. I'm not getting what you are saying, Hardik. Ritika Gupta, the question is clearly mentioning that the closing stock is to be valued at prime cost. So that's why we have calculated prime cost. So 15,000 is the profit on 90,000. So how much will be the profit on 4,500? A simple mathematics, my dear. So let's proceed further with finished stock account. So we'll write 2 opening stock and 2 process second. We'll copy paste the amount 75750, 36,750 and 1,12,500. Now opening stock is 22,500. Inter-process profit included in opening stock is 8,250. So this will be 14,250. Now it's just a simple finished stock account. Further, the closing stock is 11,250. Now, guys, do make a note of it. See, read the question carefully. That stock in process is valued at prime cost. So process first, process second is valued at prime cost. But finished stock is valued at the price at which it is received from process second. So very important, the closing stock of finished goods or finished stock account is valued at the price at which it is received from process second. So this profit element we will not consider. So when talking about the closing stock, very simple, my closing stock is how much? 11,250. So when talking about the proportionate profit element, we will not be taking the total, that is 8,250 plus 36,750, because it is given that it is to be valued at as per the price that it is received from process second. They are following the LIFO approach, that is first in, first out. First in, first out. So here in 36,750 is my profit on 1,12,500. So 11,250, how much will be my profit? So my profit will be 11,125. Sorry, 3,675. So this will be 7,575. So final cost will be 8,2425. Now, herein it is given in the question that the sales during the period are 1,40,000. The sales during the period are 1,40,000. So by costing P&L 1,40,000, my cost to the company is how much? 82425. So my overall profit will be how much? 57575. This will be 16,250, 16,250, 82425, 57575, and 1,40,000. If you guys have any doubts or queries in this part, you guys can please post your queries. Waiting for your queries, guys. This is the total, my dear. Opening stock, process second, minus closing stock, we have got 82425. Tambeshwari. It is mandatory, my dear Srinivasan. Yes, we can say it is the balancing figure. Hardik, you are saying that, sir, if in this question it is not written that opening stock profit is to be shown separately, but then also we show it. So I'm asking that we have to do it. See, Hardik, when talking about process second and finished stock account, there will always be some profit element in the opening stock, because opening stocks represent what? The opening stock represents what? The stock that is received from the previous process. The stock that is received from the previous process, and the output of that process is transferred to this process at cost plus profit. So there will be by default some profit element in the opening stock. So we have to do it separately. This is what I have understood from your question. Still, if you have any doubts, you can please post. Yes, Kasak, it is the balancing figure. Tambeshwari, it is the total. Whatever the doubts you have, whatever it is running in your mind, you guys can please post your queries. Don't feel like that why I'm asking so many questions again and again. I request you guys, whatever running in your mind, do post your queries. I'll be addressing each and every query of yours. So don't worry, guys. Don't feel shy to post your queries. Yes, Vishmita, Ankit Mishra, Bala Chandran, any doubts? Mahalakshmi, Nancy, Preeti, any doubts? So, Hardik sir, if like last line of opening stock profit is not there, then profit process first minus process to opening stock. Yes, we can say, but always remember this information will be given in the question, Hardik. Don't worry. So, Tambeshwari, any doubt? Kasak, any doubt? Neeru, any doubt? Srinivasan, Ritika Gupta. Okay, so Ritika sir, closing stock is valued at prime cost one more time. So, here when talking about in process second, we have taken the total value, that is 8250 plus 36750. But herein, because the question was saying that the stock in process is valued at prime cost. But herein, when talking about finished stock account, it is clearly given that it is to be valued as per the price that is received from process second. So herein, when talking about process second, this data is available, that is 75750, 36750, and 1,12,500. So we will not be considering the total, but simply will be considering only as per the data that is received from process second. So 36,750 is the profit on 1,12,500. So how much will be the proportionate profit on 11,250? This will be 3675. Vaishnavi, you please check your calculation. It is not 6250, it is 8250, my dear. Please recheck your calculation. It is not 6, it is 8250. Anyone else with interprocess profit? Again, it's just a bonus marks. You have to stick to the concept, read the question carefully, and solve the question step by step. Yes, I understand that this question is a bit lengthy, but it is not that difficult. Eight marks. Tambeshwari, can you please repeat what you are saying? Preeti Kumari, max to max 8 to 10 marks. That's it. ये सेम क्वेश्चन एग्जाम में आ चुका है more than 2 to 3 times. Because it is given in the question, that's why I'm doing all this exercise, Srinivas. So guys, let's take a break of 15 minutes. You can mention the question. I'll be discussing that question also, Tambeshwari. See, the point is 3 sessions are allocated for process costing. So I have to cover the concepts also and few practical questions also. So that's why I'm just trying to cover as much as possible the concepts, because costing is all what about concepts. So if you are thorough with the concept, you can solve any questions. So the major thing is my study, my teaching pattern is more like focusing more on concepts rather than discussing the question. Yes, I'm discussing as many as question possible, but my focus is more on concepts rather than questions. So let's take a break of 15 minutes. I'll be back after 15 minutes with the next part, that the most important part of the chapter, that is the valuation of work in progress. So let's take a break of 15 minutes. Edwin sir, are you there? Manish sir? Welcome back, my friends. So let's start with the next part and the most important part of the chapter, that is work in progress. So when talking about work in progress, again, this part is the most important part of the chapter. People find it a bit tricky, but I request you guys to please pay attention by the end of, this chapter. I assure you, you guys will be thorough with this part also. So it's a very easy part. The point is stick to the concept and practice few questions, then you'll find it very easy. So let's start with work in progress. Now, what is work in progress? See, we make inputs into a particular process. These inputs were processed in a particular process and they were transferred to the next process. This is what we have done till now. Now, let's take a situation. Let's say we have made an input of 10,000 units. Let's say my normal loss is at the rate 10%. So we can say 1,000 units. So my output is what? 9,000 units. Of these 9,000 units, let's say 8,000 units were finished and transferred to next process. Remaining 800 units are still in process. Assuming there is no abnormal loss, abnormal gain. Out of these 9,000 units, we were expecting this production. 8,200 units were finished and transferred to the next process. But remaining 800 units are still not complete. They are still in process. So this is what we call as work in progress. That is, units started for production but remain unfinished by year end is what we call as work in progress. That is, the inputs that are made into are introduced into that process, started for production, but few inputs remain unprocessed or semi-processed at the year end. We call them as work in progress. So when talking about the meaning of work in progress, units started for production in a process but remain unfinished by year end. एकदम सिंपल लैंग्वेज में, सीधी और आसान भाषा में, the unit started or introduced into a particular process but remain unfinished by the year end is what we call as work in progress. Now the point is how to value the units that are semi-processed or unprocessed, whatever it is. So when talking about the valuation of the concept of equivalent production comes into the picture. Concept of equivalent production comes into the picture. Now, what is the concept of equivalent production? I'll be discussing this part in detail in this session and the coming session. If you guys have any doubts in this part, you guys can please post your query. Further, I request you guys to please do note down the conceptual part. As I mentioned, that whatever the concept part I'm discussing, do write in your notebook. So giving you a minute time, I request you guys to please copy this explanation. No worries, Vaishnavi. No, Hardik, I'll be discussing this part separately. So let's discuss this with the help of an example. Let's say my process cost is 1,80,000. Let's take a very basic situation, what we have discussed till now. So my inputs are, let's say, 10,000. Let's say normal loss is at the rate of 10%, is, let's say, 10% of input, so 1,000 units. So my output is, let's say, 9,000 units. Assuming there is no abnormal loss and abnormal gain, my expected output and actual output are same. So here in my process cost is 1,80,000. Assuming no scrap value, the estimated production is 10,000 minus 1,000, that is 9,000. So my cost per unit will be how much? 20 rupees. This is the cost of the units that are 100% processed. I repeat again, this rupees 20 is assuming that there is no work in progress. This is what we have discussed till now. So this is the cost of what? The units that are 100% processed. These units are 100% processed. So in this case, we can easily calculate the cost per unit because we know that we have only the units that are 100% processed and the cost is rupees 20 per unit. Let's say in this case, if the units are, let's say, 80% processed, if in the similar case, we have the cost of 100% processed unit, let's say if the units are 80% processed, we can easily say my cost will be how much? 20 is the cost of 100% processed unit. So for 80% processed units or 80% completed units, my cost will be how much? 16. Let's say if the units are 60% processed, my cost will be how much? 20 into 60%, that is 12. So it's a very basic situation wherein we have first calculated the cost of 100% processed unit, that is very easily, wherein 1,80,000 divided by 9,000, that is rupees 20 per unit, is the cost of 100% processed unit. And once the cost of 100% processed unit is calculated, now we can easily calculate the cost of units that are 80% complete or 60% complete. So this is a very basic situation. Now let's take a different situation. Let's take one more situation wherein, let's say, my process cost is 1,20,000. I made an input of, let's say, 10,000 units, assuming no normal or abnormal loss. So my output will be in 10,000 units only. Now, when talking about the output, we have the following details. We have 5,000 units that are 100% completed. Three thousand units that are not 100% completed, they are only 80% completed. So out of these 10,000 units, Out of these 10,000 units, 5,000 units are 100% completed, 3,000 units are 80% complete, and remaining 2,000 units are, let's say, 30% complete. Now, guys, herein we have three categories of output. Certain units that are 100% completed and processed and completed and transferred to the next process. And these 80% and 30% units that are semi-finished, we call it as work in progress. Now, herein our task is to calculate the cost per unit. Now, our major motto is what? To calculate the cost of these 5,000 units, 3,000 units, and 2,000 units. How to value these 5,000 units, 3,000 units, and 2,000 units? So herein the concept of equivalent production comes into picture, and we will calculate the equivalent number of units. What we will do, we'll calculate equivalent units. So herein 5,000 units that are 100% complete. So equivalent units will be how much? 5,000. 3,000 units that are 80% complete. So the equivalent number of units will be how much? 3,000 into 80%, that is 2,400 units. 3,000 units that are 80% complete. So equivalent number of units will be 2,400 units. So what is this 2,400 units? It says that the cost of 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. I repeat again, what this says, that the cost of these 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. I repeat again, the cost of these 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. Similarly, for 2,000 units, it will be 30%. So again, it means what? The cost of 2,000 units that is 30% complete will be equal to the cost of 600 units that are 100% complete. So herein we have calculated the 100% equivalent number of units, that is 5, 6, 7, and 8, 8,000 units. These 8,000 units are 100% complete. So now we have got the 100% completed units. So we can easily calculate the cost per unit. That is 1,20,000 is my process cost divided by 8,000 units. So this will be rupees 15 per unit. Now see, we have got the cost of units that are 100% complete, that is 15 per unit. So for 80% completed units, the cost will be how much? 15 into 80%. That is rupees 12. And for the cost of units that are 30% complete will be equal to 15 into 30%, that is 4.5. So now we can easily calculate the cost of these 5,000, 3,000, and 2,000 units. So for 5,000 units, the cost will be 5,000 units are 100% complete. So this will be 15. So this will be 75,000. Okay. These 3,000 units are 80% complete. So the cost of 80% is how much? 12. So this will be 36,000 rupees. And these 2,000 units are 30% complete. And the cost of 30% completed unit is how much? 4.5. So this will be 9,000. This is what the total is, 1,20,000. So I repeat again, guys, very simple, very easy. When the units, when the in question work in progress is given, the first step is we will calculate the equivalent number of units. Equivalent number of units means 5,000 units are 100% complete. So this will be 5,000. 3,000 units are 80% complete. So equivalent number of units will be 2,400. 2,000 units are 30% complete. It means equivalent number of units will be 600. So herein we have calculated. So we have got 8,000 units that are 100% complete. So 1,20,000 divided by 8,000 will get rupees 15 per unit as the cost of 100% processed unit. So herein, if 15 rupees is the cost of 100% completed units, so for 80% completed, we need for 80 and 30 also. So for 80%, it will be 12, and for 30%, it will be 4.5. So now we have got the cost per unit. So very simple, 5,000 into 15, 3,000 into 12, and 2,000 into 4.5. There is one more way. There is one more way to calculate this cost. See, 5,000 units are 100% complete. So we have got the cost 15 rupees. So this will be 75,000. Now, as I said, that the cost of 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. So for the second category, let's assume this as first category, second category, and third category. So this is first, this is second, and this is third. So this is first. For second category, 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. So instead of taking 3,000 here, we can directly take 2,400 into 15. So this will be 36,000. And for the third category, again, the equivalent number of units are 600 into 15. So this will be 9,000. So as I said, the cost of 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. If you guys have any doubts, I'm writing this explanation also. It says the cost of 3,000 units that are 80% complete will be equal to 2,400 units that are 100%. So this is all about the theory part. If you guys have any doubts in this part, you guys can please post. I request you guys to please copy this concept. It will help you guys a lot while revising for the exams. See, these 3,000, 2,000 units are not 100% processed. They are semi-processed. They are not 100% finished. They are only 80% finished. If so, it means what? That 3,000 units that are 80% processed, it means what? Proportionately, 2,400 units are processed fully. That's what it is. Yes, Srinivas, when talking about this method, practically, I'll not recommend this method because we have to do this additional calculation. Always try to solve this method. I'll be discussing this method only now in future. So whatever the queries you have, you guys can please post. Further, I request you guys to please copy this part. Giving you 2 to 3 minutes time. So I request you guys to please copy this explanation. Thank you so much, Hardik. See, we can say again, Preeti Kumari, just focus on the language. It says that the cost of 3,000 units that are 80% complete will be equal to 2,400 units that are 100% complete. To remove, to avoid any sort of confusion or, so I have written the language also for better understanding, Preeti. Please copy this explanation. Please write this paragraph also. This is the first part till here, second part till here, and the third part. Yes, Balachandran, correct answer. Now let's discuss one question from the material what I have provided. I request you guys to please download the material what I have provided over the portal. Page number is 15th. Slide number 15th. I'll be discussing a question from slide 15th. Equivalent basic. The concept of equivalent production. For better understanding, I'm discussing one easy question so that you guys will find it more comfortable while solving the practical questions. So I request you guys to please open your study material, slide number 15. Sorry, I request you guys to please open the material what I have provided, slide number 15. I'm sharing the screen for your reference. You guys can take the screenshot also. So let's start with this question concept of equivalent production, wherein the inputs are 10,000, material is 49,000, labor is 19,200, overheads are 28,800, units transferred to the next process is 9,000, closing work in process is 1,000 unit. Now herein, it is not given that how much percent they are processed, but they have given the detailed explanation also that is material is 80% processed and labor and overheads are only 50% processed. In the previous example, what I have taken that straight away I have given that is 60% process or 50% process. But here in the breakup is also given that is material is 80% process and labor and overheads are 60% process. You are required to prepare the statement of equivalent production and the calculate the value of units transferred and value of work in progress. So let's start with this example. We'll prepare process account. So material, it is 49,000. Labor, it is 19,200. Overheads are 28,800. There is no normal loss. Simply the units transferred and the closing work in progress is given by process second. 9,000 units are transferred and by closing work in progress is given. So ultimately we have to calculate the value of these two. So ultimately we have to distribute these 97,000 among these two. Now herein, there are certain units that are not 100% processed. The question is in the material that I have provided. Now see herein, there are certain that there are 1,000 units that are not 100% completed. They are only semi-processed. However, the breakup is also given that in respect of material, they are 80% processed, and in respect of labor and overheads, there are 60% processed. So we have to calculate separate equivalent number of units for material and labor and overhead. So for this, we have to prepare statement of equivalent production. So we have to calculate the equivalent number of units in some presentable way. So do make a note of it, guys. We have to prepare a statement of equivalent production. So the first column will be the particulars, total number of units. Now, since the percentage of completion in respect of material and labor and overheads is different, so we have to calculate the equivalent number of units separately. So percentage of completion and units, percentage of completion and again, I'm just following the same way, but in some systematic ways, the same approach, but in a systematic way, because the percentage of completion of material, labor, and overheads are different. So let's start with the first part, that is for 9,000 units, that is units. We have 9,000 units. They are 100% processed in respect of material. So for material, it will be 9,000. For labor also, they are 100% processed. So equivalent number of units will be 9,000. Now for closing work in progress, it is 1,000 units. In respect of material, they are only 80% complete. So this will be 800. And in respect of labor and overheads, they are 60% complete. So the equivalent number of units will be 600. So very important, this is the breakup of these 10,000 units. So the equivalent number of units in case of material, it will be 9,800. And for labor and overheads, it will be 9,600. So these are 100% processed units. Again, guys, just following the same approach, but in a systematic way, because the percentage of completion of material and labor overheads are different. अगर We can say straight away दिया हुआ होता कि closing work in progress is 70% complete, so no need to prepare this statement. Now calculation of cost per unit. Of 100% process thing. So when talking about material, it is 49,000 is the cost divided by equivalent number of units, that is 9,800. For labor, it is 19,200 and equivalent number of units are 9,600. And for overheads also, it is 28,800 divided by 9,600. So this will be 5. This will be 2 and this will be 3. So the cost of units that are 100% completed is what? 10. The cost of units that are 100% completed is what? 10. Now let's calculate the cost of units that are 80% and 60% complete. I am teaching you guys both the approaches, and then from next question and onwards we will be discussing the simplest approach. So herein I am explaining both the things. So now calculation of cost per unit of work in progress. So for material, for 100% processed, it is 5. And material is 80% complete in respect of closing work in progress. So 5 into 80%. So this will be 4. For labor, 100% completed is 2. And the percentage of completion is 60%. So 2 into 60%. This is 1.2. And for overheads, 3 into 60%. So this will be 1.8. Now, when talking about the value of units transferred, total units transferred are 9,000 and they are 100% complete, and the cost of 100% processed is 10. So 9,000 into 10, this will be 90,000. And for work in progress, we have already calculated the cost because material is processed 80%, labor is processed 60%, and overheads are processed 60%. So 7,000 into 7. One second, I think I made some mistake. Sorry, it is 1,000. Units in process are 1,000. So 1,000 into 7, this will be 7,000. So this is how the units transferred and work in progress is valued. Now, very important. This work in progress can be calculated using other way also. So no need to do this exercise. You can directly calculate the value of work in progress, wherein in respect of material, as I said, the cost of units that are 80% complete, 1000 units that are 80% complete will be equal to 800 units that are 100% complete. So for material, it will be 800 into 5. For labor, it will be 600 into 2. And for overheads, it will be 600 into 3. This will be 4000. This will be 1200. This will be 1800. So you can directly calculate the value of work in progress by this way, wherein 800 into, because see, as I said, that 1000 units that are 80% complete will be equal to 800 units that are 100% complete. So herein, instead of doing all this exercise, you can directly calculate the cost as per this way. So herein what we have done, we have calculated the cost per unit separately into 1000. So this is how I got 7000. Alternatively, 800 into 5, 600 into 2, 600 into 3. So both the approaches are correct, but this approach is recommended. Because एक additional आपको working note बनाने की जरूरत नहीं पड़ेगी. If you guys have any doubts or queries in this part, you guys can please post. Again, it's a very simple way to solve the question. Herein, the percentage of completion of material and overheads are given separately. That's why I have to prepare this statement. Particulars, total, material, labor and overhead, the percentage of completion in units, percentage of completion and units. So we have calculated the equivalent number of units separately for material and labor and overheads. So for material, the cost per unit will be 5. For labor and overheads, the cost per unit will be 2 and 3. So the cost of units that are 100% complete will be 10. If we want to calculate the cost per unit of work in progress also, we can easily calculate. That is 5 is the cost of 100% completed material. So for 80% completed material, it will be 4. Again, 2 is the cost and 3 is the cost of 100% processed in respect of labor and overhead. So for 60%, it will be 1.2 and 1.8. So the cost per unit of work in progress will be 7. So 1000 into 7, it will be 7000. If you don't want to make this working note, you can directly calculate. That is 800 into 5, 600 into 2, 600 into 3. So this method is more easy and recommended. Further, अगर आप ये मेथड लगाओगे तो chances are there कि आपसे कुछ ना कुछ mistakes हो जाएगी. So I'm done with this explanation. If you guys have any doubts or queries in relation to the basic equivalent production, you guys can please post your query. Always remember, first step, process account. Second step, statement of equivalent production. Third step, cost per unit of 100% processed. Then units transferred and work in progress. No need to prepare from next question because I find it a bit difficult. I mean, students से कई बार mistakes हो जाती है. Bhavnagar, 1000 units that are 1000 units are 80% processed in respect of material. So 1000 into 80%, 800 and 1000 into 60%, 600. So these are the equivalent number of units that are 100% processed. I hope, Bhavna, your query is resolved. We are done for today, Hardik. I'll be discussing 2 more questions relating to equivalent production. It's already 9:33. Anyone else with any doubts? I hope you guys are thorough with the concept of equivalent production. As I said, my teaching is more on concept based rather than practical questions. So I hope once you are thorough with the concept, you can solve any questions very easily. So I'll be discussing approx 3 to 4 questions in the coming session. So just want to know that I hope you guys are thorough with the concept. Thank you so much, Nitin. Thank you so much, Preeti. Anyone else having any doubts or queries? So guys, to revise what I have discussed in these 2 sessions on process costing, almost the concept part is over. Yes, one more part is left. That is what will be the treatment of abnormal loss, abnormal gain, and normal loss if there is work in progress. Rest everything is done. We have to discuss 1 or 2, 3 questions. That's it. Rest everything is covered in detail. So thank you so much for your time and patience. I'll be discussing the remaining part in the coming session. So till then, I request you guys to revise what I have discussed till now. Thank you so much. Take care, guys. God bless you. Manish? Yes, it's done. Thank you. You too, sir.